Hi, I'm Hedgeye's founder and CEO Keith McCullough. Good news, the Hedgeye Investing Summit is back. We're super excited about this one as always. The first week of October, I'll be hosting in-depth conversations with the smartest minds in investing. Some of my favorite people like Liz Ann Saunders, Kyle Bass, and Grant Williams, just to name a few. We'll be discussing the big stuff, the big trends impacting markets in the days, weeks, and months to come. You don't want to miss this one. Registration's free. How good's that? You won't hear pro-to-pro conversations like this anywhere else, anytime.
Basically, the situation in China is very dire, and it worries me a lot. I compare China a little bit to I use the analogy of Lehman Squared, in the sense that, two things. First of all, if it was a movie, it would be the sequel. It would be like Lehman². We didn't really solve things in 08. We transformed, transferred, whatever. And you're now in a situation where we have these problems, magnified to the point that there's not Lehman², it's Lehman². And this refers more globally to this mess that we created on a global scale, where China is a meaningful part of it. So in China, what you see is, despite all these beautiful words and plans to effectively change the economy and create, rely less on exports and become more driven by consumption, domestic and stuff, and they've done a lot of great things there. But the Chinese economy and the Chinese model is very much obsessed with control. And it does it in a way where it imposes a lot of rigidities in the system, be it the one-child policy, the currency controls, the monetary policy mechanisms, and everything else. And when from the outside looks like an incredibly robust, solid framework, it's actually potentially quite fragile under certain circumstances. It's a bit like a concrete building in an earthquake, right? It might look very, very strong. And so with China, what you see is that the country basically has, let's start with, to keep things simple, let's start with the currency controls. So you decide that you want to control the exchange rate, the flow of money, and you make it very difficult for money to go. And then what you do is, every time you face some crisis, you're going to effectively print a ton of money, which cannot really exit freely, right? So what happens with that money that is printed, and stays in the system? Well, it kind of flows into things like real estate and infrastructure. And you sort of create this dynamic where it's been about 30% of the Chinese GDP is related to construction. And so you have this dynamic where all this liquidity, all this money, all these imbalances, in my opinion, actually flow into this and create higher and higher valuations, and a model that has a lot of leverage, and also China has its own idiosyncrasies, right? So one of them that worries me a lot is this very complex framework of implicit guarantees, right? Where does the government end, right? You have the banks effectively pushing monetary policy as an arm of the government. And so what you end up is with this ginormous bubble, which it's a matter of time. They implode by their own weight, because you've been creating or pushing valuations to a point where people can't really afford them, right? Because that's and so the model, the leverage, the nuisances take us to a point where, on Twitter I was saying that I think Evergrande is more like Bear Stearns than Lehman. But what I mean is, we're going to look back at this, at what's happening right now, and connect the dots and see that this is the tip of a giant iceberg of, leverage, bubbles, and implicit guarantees that is clearly too big to fail. But how does this end, and how well, clearly, in my opinion, the first phase, and we've seen today, and that's why you pick very timely dates. We've seen also today Fantasia, right? Another big developer not paying, right? The bond going to 38 cents on the dollar, massive plunge overnight. And that's why I say this is the tip of the iceberg. The model is there, it's of ginormous scale, and basically the government will have to intervene, yes or yes or yes. I don't see how, they let this thing implode. And the way they intervene is by doing more of the same, by printing more.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there, subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.